whenever there is, no exceptions, to whenever the yield curve inverts, typically about 18 months-ish later, you go into recession. Why would a recession matter to you? Well, negative rates effectively are an erosion of principal. That means there's less liquidity in the markets for the corporations. Then the corporations start laying people off. So jobs are lost, recession starts, and you got a big problem. U.S. orders diplomat families out of Ukraine citing war risk. Because guess what wars can do? First of all, they can really justify ramping up those guns again. They can really justify that, okay? So whoop-de-doo, they can make that happen. Isn't that a grand old thing? But what it also does is it can hide what's really happening, which is the transition to a whole new system. Life is different than it was before, well, frankly, before 2008. Because that's really when the system died, and I don't care what anybody says. I have absolutely evidence of it, and all that's happened between then and now is that the system's been put on life support so they can get into proper position. They say that they don't have the CBDC ready. Not so sure about that. We'll see. Because really, if they have everybody distracted by the war and the other chaos, I mean, it isn't just one thing, because then you would be able to focus on, maybe two things. Oh no, there has to be a lot of chaos going on so that you're looking here and 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 here, but you're not looking over here. And that's where all the damage to you really happens. I hate these people. I'm sorry. I just do. I cannot stand it when people are lied to. That's why I'm Data Gal. That's why I give you all the links. Go and do your own due diligence. Because the real trend is not whatever is happening in the stock market or the bond market or any of that stuff. The real trend is what's happening to your purchasing power. You are the guinea pig. You are not too big to fail. In my opinion, you are too big to fail. But in the Fed's opinion, oh no, 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 no. You're just about the right size, because what are you going to do about it? So the time to do something about it is now. You can probably tell that I'm trying to push you. Well, I am, because complacency will not serve you well. And ignorance does not make you immune. It just leaves you vulnerable, and I don't want you to be vulnerable. You follow these links, you go in, you do your own due diligence, and if you have a different opinion, hey, I will support your right to have that different opinion. But do not listen to these talking heads, because they don't give a crap about you. They're just shills, and they're just doing their job to get you and keep you sucked into the system so that they can take your wealth away. Wealth never disappears, it just shifts location, and it should be pretty darn obvious to everybody right now that the wealth has shifted to those at the top, away from those at the bottom and in the middle. What middle class? What middle class? They're gone. That started in 2002, by the way. Thank you very much, Amazon, who doesn't have to pay state taxes and doesn't have to make a profit. Mom and pops have to pay taxes. Mom and pops have to make a profit in order to stay in business. This inflation that we're in, only one way to fight inflation, and that's with deflation. So we gotta have a recession if they're really trying to fight the inflation. But that's not true. They don't really want to fight the inflation. They want to control it so that you stay in it and you don't realize what's happening. But there are more and more of us frogs out there that are starting to wake up and going, this water's getting kind of hot. And I hope that if you're one of those that are just starting to wake up and go, something's going on here that doesn't make sense. When it doesn't make sense, you really need to believe it. Because the only way that they can pull us out of a recession is with more currency devaluation. And I didn't put this on there. I have on many others. And it goes, well, what are you worried about? 35.5. That's actually 0.0355 cents. And, you know, it was a little bit higher than that the last reading and a little bit higher the reading before, etc. You get my point. It's going down. And there's only 3 cents left. And the reality is, this has happened over 4,800 times. The fiat money will go to its intrinsic value, its true value, its fundamental value, which is a big fat zero goose egg. Those who hold those assets that can only be converted into fiat money. So stocks and bonds, and I'm sorry, cryptos at this point. They're not really a tool of barter yet, right? ETFs, mutual funds, annuities, CDs. You can only convert that into the local fiat money. Now, when you hear me say fiat, that is a government. Fiat means, literal translation is by decree. So that's why you hear me refer to it as government debt-based money. When you hold physical gold, physical silver, you're holding it. I hold it. I own it. There is no counterparty risk. This next recession could absolutely trigger the looming hyperinflation. All that money that's been held in the markets, it goes someplace. Wealth never disappears. It merely shifts location. My goal for everybody watching is to have that wealth shift your way. And you do that by understanding. You don't have to know, or have the experience that I've had. If you can learn the patterns that I'm trying to show you in all of my work, certainly not just today, then when you can recognize those patterns and you can also learn how to define the true value of any asset or instrument, I call that the fundamental value, because at some point that's where it's going. That's what happens to every asset. It goes toward its true value. If you can know those two things, nobody can pull the wool over your eyes.